is another Thank God Friday edition of Money Moves from here at the FMDQ studios in Lagos. I am Melissa Enoch.
And I am Grace Agbarago. We hope you all had a great week so far as we head into the final weekend in the month of January.
All right, let's tee off with your news now. For this Friday, Airtel Africa PLC reported strong financial results for the third quarter and 9 months ended December 31st, 2025. For the third quarter, revenue rose to $1,685 million from $1,268 million a year earlier, with net income up to $177 million from $133 million. Basic earnings per share from continuing operations improved $0.04 from $0.036. For the 9-month period, revenue increased to $4,667 million from $3,638 million, while net income rose to $480 million from $164 million. Basic earnings per share from continuing operations rose to $0.131 from $0.044, reflecting strong growth across the group. Still on earnings news, Ethio Telecom reported revenue of 82.02 billion birr in the first half of the current fiscal year, an 81% increase from a year earlier, driven by a strong growth in data usage and mobile money services. Chief Executive Frehiwot Tamiru said the growth was led by higher service usage rather than December tariff adjustments, with data traffic rising 46.6% as customer behavior shifts towards digital services. Foreign currency earnings rose 83% to $88.19 million, while mobile sites expanded to 10,288 across 133 towns. Telebirr remained a key driver, with transactions hitting 1.9 trillion birr during the period, up 94% year on year. Meanwhile, the International Monetary Fund is weighing in on the country's 2026 interest rate outlook. Speaking on the potential impact of a rate cut, IMF President Representative in Nigeria, Dr. Christine Ebeke, highlights expectations for monetary policy, inflation, and economic growth. Let's listen.
The decision will be data-driven. It's difficult to forecast with precision exactly what the MPC is going to do, but what is clear is that there is room to recalibrate the monetary policy rates conditional on the trajectory of inflation. So if the inflation print continues to trend downward, the CBN and the MPC will have some room to, to provide some rate cuts. But at the end of the day, we have to look at these things in a general equilibrium. Okay, so inflation is trending downwards. There's potential for rate recalibration, but at the same time, you have to look also at some of the vulnerabilities. The FX market remains dependent on short-term capital inflows. You have to understand why these capital inflows came in the first place. They came because the yield and the carry was interesting for them. It's true that between 2023 and now, the narrative has changed. There is more belief in the Nigeria story. So you may think that some of these capital inflows may decide to stay just because now they passed so the focus is no longer just on the yield, but also on being more patient and staying long on Nigeria. So because of this exposure of the FX market to short-term capital flows, the rate cuts will have to take into account also that particular exposure. So our recommendation will be data dependent, look at incoming data, be sure about how firm is the disinflation, recalibrate rates according to what you see, but also at the end of the day, we think that until Nigeria inflation converged to what the target will be, and we're still waiting for the CBN to define what is the inflation target at some point. Yeah. It will be important to keep the real interest rate positive, so the difference between the nominal rate and the positive rate. We don't think that Nigeria can right now still afford to have a negative real interest rate, so they will have to still keep the real positive rate, the real interest rate positive, but still they have room, if inflation continues to come down, to start really embark into a cycle of potential downward adjustment to a more relaxed monetary policy.
In Uganda, the Capital Markets Authority has issued a notice to public companies requiring compliance with corporate governance provisions. Companies that do not adhere to any governance codes prescribed under other laws must submit a statement of compliance with the Code of Corporate Governance in Table F of the Companies Act, Cap 106. The deadline for submission is February 13, 2026. The measure aims to promote orderly, fair, and efficient capital markets and strengthening investor confidence through strong corporate governance. In Nigeria, leaders are highlighting the growing investment and trade relationships between the United States and Nigeria. Discussions focus on opportunities for collaboration, private sector engagement, and strategies to strengthen bilateral economic ties. Here are excerpts.
These working groups have come up with very thoughtful recommendations to tactfully address the trade and investment issues in each of these priority sectors, and we as governments and our teams intend to execute on the recommendations hereafter.
So we're supporting private sector as they scale in services, technology, the synergy between Nigerian tech ecosystem and the U.S. When you talk about agriculture, the U.S. has been a world leader in agriculture for many, many years, and Nigeria has prioritized the agriculture sector. So whether from mechanization, from the entire value chain, that synergy is clear.
In earnings news, BUA Foods PLC, one of Nigeria's largest food and consumer goods companies, has reported full-year 2025 earnings that significantly beat market expectations. The company recorded revenue of 1.80 trillion naira for the year ended December 31, 2025, up 18% from 1.53 trillion naira in 2024. Profit after tax soared 91% to 507.7 billion naira, supported by strong sales across sugar, flour, pasta, and rice segments and lower finance costs. Gross profit rose to 672.2 billion naira with a gross margin of 37.3%, while earnings per share nearly doubled to 28.21 kobo. The company also expanded total assets to 1.39 trillion naira, with shareholders' equity climbing to 702.8 billion naira. In Uganda, the Insurance Regulatory Authority has provided an update on the recent IRA forum, highlighting key developments and insights for the sector. Dr. Kadunabi Lubega, CEO of the IRA, shares feedback on insurance trends, regulatory initiatives, and the future outlook for Uganda's insurance industry. Let's take a listen.
The Capital Adequacy and Prudential Regulations 2025 are therefore timely and are strategic in playing its rightful position. They are designed to ensure that the insurers operating in our market maintain the capital levels that are commensurate with the nature, scale, and complexity of the risks they underwrite, while at the same time strengthening the governance, risk management, and the financial reporting practices. These regulations are aligned to the international best practices which are implemented and they were gazetted. And these are also aligned to the IFRS 17, which I know this must be known and clear to many of you. The strategic realignment with a global benchmark represents a significant change in the insurance accounting and solvency measurements in decades. They take into account the evolving risk landscape, the ranging things, including the climate-related risks, the health shocks, and the operational and market risks. These are important as we do underwriting and secure the policyholders. The capital adequacy and prudential regulations.
Finally, on News Now for this Friday, Africa Finance Corporation has received an A long-term and A-1 short-term issuer credit rating with a positive outlook from S&P Global Ratings, marking its highest rating from a major global agency. S&P said the ratings reflect AFC's strong financial and institutional profile, supported by robust liquidity, disciplined risk management, and its ability to mobilize private capital for complex cross-border infrastructure and industrial projects across Africa. I am Melissa Enoch, and that's it for News Now today. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates.
One thing I loved about the report and the issues that it highlights is it really shows how the importance of technology, the digital transformation, particularly with regard to financial inclusion that has taken place in the region over the years. I think, honestly, of course, I'm biased, I'm talking my book, but really difficult to think of a region that has been impacted as much by digital transformation as Sub-Saharan Africa has. Particularly in the area of digital finance, leapfrogging we've seen in action. I remember I was based in the mid 2005-6 in East Africa, in Kampala, and I remember when M-Pesa was just being rolled out in Kenya, and there came a point when, I don't know, about 10 years ago when I was in Nairobi, wanted to make a payment and I couldn't because I didn't have an M-Pesa account. I had to scramble to exchange dollars for shillings to be able to make payments. And this was not quite, it's outside Nairobi. So the penetration of digital finance, technology use at all aspects of life is really just incredible. It has allowed leapfrogging, it has allowed it has had an impact on social life, political life, way more, including the dissemination of information.
Welcome back to Money Moves. Let's now go over to Grace for updates on how the markets have wrapped up on this last day of the week. Hello there again, Grace.
Hi, Melissa. Let's take a look at how the markets wrap trading for the week and for the month of January. Starting off with the equities, the Nigerian Stock Exchange slipped by 0.09%, while the BROVM gained 1.01% to 365.75. The Nairobi Securities Exchange rose 0.07% to 195.36. In South Africa, the Johannesburg Stock Exchange tumbled 3.65%, and in North Africa, Morocco's MASI fell 0.71%. Let's do a quick round on some of the Pan-African currencies. The Rand weakened 1.37% to 15.95 against the US dollar. The Egyptian pound rose 0.21%, while the CFA franc was nearly flat at 549.04. The Kenyan shilling held steady at 129. The Moroccan dirham gained 0.53%, while the naira rose 0.31% to 1,387 naira 55 kobo as at 13:50 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude eased 0.20% to $70.57, while US WTI dipped 0.02% to $65.41. Natural gas was nearly flat at $3.91, and Arabian gasoline slipped 0.37% to $1.91 as at 13:45 GMT. Now, finally, two metals prices. Gold tumbled 5.51% to $5,025.30. Copper fell 2.81%, and platinum plunged for 12.13% to $2,300.70. Aluminium dropped 3.66%, while iron ore eased 0.08% to $105.77 as at 13:46 GMT. And that's it on our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and do have a splendid weekend.